So you've probably noticed it. Something feels off in the economy right now. Now the headlines don't directly say it, but you feel it every time you fill up your tank, every time you pay your rent or your mortgage, or you try to make a purchase that used to be simple. The truth is, most American households are one financial emergency away from complete bankruptcy. And under the surface of rising costs and growing uncertainty is a deeper issue, a broken system built on debt, delayed promises, and dangerous assumptions. But this video, it's not about fear. This video is about seeing clearly, acting strategically, and positioning yourself to win. Because while most people will continue to be blindsided, smart investors will be prepared. And that's what this channel is all about. Raising your financial intelligence and raising your wealth along with it. My name is Ryan D. Lee, and I want to welcome you to the Wealth Outside of Wall Street channel. This channel is built for you if you're an entrepreneur, an investor, or a freedom seeker who refuses to play by the old rules of money. If you're tired of being told to just be patient while the system stacks the odds against you, if you're done hoping that a 401k will be enough someday, and if you want to build real financial freedom in 10 years or less, this is the place for you. So take a second, subscribe, and stay locked in. Let's raise your financial IQ because the next 10 minutes could change the way you see money forever. So let's start off at looking at the facts. The truth will set us free. In Q4 of 2024, American household debt hit over $18 trillion for the first time in American history.
A new report from the Federal Reserve shows American household debt is at an all-time high of $18 trillion.
Congratulations, we're rewriting the record books. 13 trillion of the 18 trillion was from housing debt, mortgages, HELOCs, refinancing, you name it. The remaining 5 trillion is student loans, auto loans, and credit card debt. And while housing debt has slowed a little bit over the last couple of years because people can't afford to buy right now, the rest of consumer debt, it's exploding. Student loans now exceed $1.6 trillion. Auto loans are at $1.66 trillion. And credit card debt is record-breaking at $1.2 trillion, and that's the number that's rising faster than any of the other forms of debt. But raw debt numbers, they don't tell the full story. In fact, the only time we know if something's good or bad is we have to compare it to something. So compare it to what? Let's look at income. Over the last decade, real household income has flatlined, hovering around just 2%, and that's if you trust the CPI index, which I personally don't. But if your personal inflation, meaning your expenses, is higher than your income, which for most Americans it is right now, your real income is actually shrinking. So it doesn't really matter how much your income is going up. If your expenses are rising faster than your income, my friends, you are falling behind every single month, quarter after quarter, year after year. And this is where things get really dangerous. Delinquencies, especially on auto loans and credit cards, they are surging. For the first time in the last decade, auto loan delinquencies are back up to almost 5%, and they are climbing fast. Credit card delinquencies just topped 11%, and it's the highest in decades. Now, you might be thinking to yourself, why does this matter? If you're a viewer of this channel, it's likely these stats don't relate to you. Now, maybe some of you are watching this channel and these stats do describe your situation. No matter what side of the equation that you're on, I want you to consider this. Money is a tool, and you can use the tool to get yourself unstuck from these statistics, and you can also use your money as a tool to capitalize on the opportunities that are opening up right before our eyes. Because delinquencies are the first domino. They become defaults, then they become collections, then they become repossessions, and then they become bankruptcies. We've seen this game before. And it's not just consumer debt. Businesses, they are also tightening up. Commercial banks are seeing delinquencies for businesses start to climb as well, though not yet quite at crisis levels. But for most everyday households, the squeeze is already there. Even if you're not the one falling behind on your credit cards, you're still feeling a tightening of the American economy. It is harder today to survive than it has been at any point in recent history. In fact, since 2020 to right now, there has been a 20% likely permanent increase in the cost of living in the American economy. Expenses are up, income is flat, and people are drowning in high interest rate debt just to survive. Now, before we talk about the solution, I want to talk about housing because housing is both a problem and an opportunity. Housing debt may have slowed, but prices, they have not dropped. But many people are sitting on the sidelines saying, why? Why haven't housing prices stabilized or even started to decline in the face of predominantly high interest rates? Well, here's the reality. Because no one is buying, and on the same token, no one is selling. Sellers are locked into low interest rate mortgages, and they can't afford to trade up. I mean, to trade from a 3% mortgage, which you locked in the 2020s, to a 7% mortgage, which is what's available today, you can't afford to trade up. It just doesn't make sense. Buyers are priced out of the market, hit by both high home prices and 7% mortgage rates. So people are stuck, and here's the reality. If you don't own, you rent, and rents are still rising. Yes, they're rising slow because homeowners can't afford to kick out their renters who can't afford to pay the rent, but they are still rising consistently. And renters, often the most financially vulnerable, well, they're absorbing the pressure of this tight market. So this is the standoff. It has frozen the market, but frozen doesn't mean safe. In fact, it's the illusion of safety that creates the biggest risk. So let's zoom out and let's ask the real question. As an investor, what should you do? Because while households are really struggling, and I feel that, and I want people to raise their financial IQ, to make more money, to keep more money, and to become financially free. And that is a challenge because our school systems, our government, the entire financial system is to keep you trapped, not set you free. But if you're watching this video right now and you consider yourself an investor, meaning you're wanting to better your situation, you're probably struggling with the question of what should you do? Because here's what I want you to consider. There is a massive wealth rotation that is happening right now. Wealth is going from those who are stuck stagnant to those who are moving forward confidently with a consistent strategy. Sectors are starting to shift. Luxury goods, they're taking a hit. Consumer spending is down and it probably will continue to go down. But necessities like housing, food, energy, those type of expenses, they're remaining strong. So here's the insight. Invest in what people can't stop needing. Avoid speculation, lean into certainty, and structure your financial system so it's not a gamble, but on the flip side, so that you can never lose. Now, those three things might sound like idealistic thinking, but if you're using the passive income machine, this is exactly how this investment system was created. It's created to help you invest in the one asset class that is always in demand. Single-family homes in good neighborhoods attracting good tenants. We invest, we don't speculate, meaning we don't actually play the game of Wall Street. Wall Street is the game of speculation, investing is the game of certainty. And then we structure our financial system in the passive income machine where we pair up certainty using the vault and growth using single family homes, and we use those two asset classes together to create tax-free income for life. So you might be asking yourself, what's the move? Well, let me give you 3 core principles to help you move forward confidently in this uncertain world that we're living in right now. Principle number 1 when it comes to buying real estate is date the rate but marry the assets. Yes, rates are high, but that's temporary. If you find a good property, a solid deal, or a strategic asset, don't pause because of the rates, marry the assets and refinance later. Principle number 2, I call it the barbell strategy. Balance leverage with liquidity. Leverage is powerful, but it's dangerous without liquidity. Build your real estate portfolio, but keep enough cash flexible in places like the vault so you can ride out volatility and capture upside without being forced to sell. Listen, if you want real wealth, it's about building something that's not just earning a good rate of return, but is sustainable over multi-years and through decades. This is why the barbell strategy is so important. For every dollar of leverage you have in growth assets, you need to have a dollar of liquidity on the other side. Now, for most people, they look at liquidity and say that's for emergencies or that's underperforming wealth, but I want you to consider this. On the game of real estate, when you're using leverage, liquidity is actually your permission to use leverage. The more leverage you use, the more liquidity you must have, both for your sanity and for the ability to access more leverage. And then principle number 3 is time in the market is greater than timing the markets. Here's the truth. I don't know what the market's going to do. You don't know what the market's going to do. And no financial pundit that likes to predict what the market's going to do actually knows. Now, if you predict the market's going to crash for long enough, eventually you're going to be right. Or if you predict the market's going to go up long enough, eventually you're going to be right. But the wealthy, they don't try to predict the bottom. They buy consistently, they hold intelligently, and they let time plus cash flow do the heavy lifting. Get in the market. And when I say the market, let me be very clear on this. Not the stock market. Get in the real estate market and let time work for you. Over a long enough period of time, when you buy the right asset, you, my friends, will become wealthy. So let me make this real for you. You don't need to be a genius. You don't need to time the top or the bottom. You just need to play the right game. Build cash flow first, balance risk with reserves, buy assets that people always need, single-family homes, and protect your money from taxes, inflation, and Wall Street volatility. If you do these 4 things, which are the core tenets of the passive income machine, you're going to win. And winning for me does not mean waiting until you're 65 with your fingers crossed, hoping that you're going to have enough. Winning for me is financial freedom, cash flow greater than expenses in 10 years or less. That's what this channel is dedicated to helping you accomplish, understanding the pitfalls and the opportunities always apparent in any market, up or down or flat. So my friends, if you're ready to stop playing defense and start building a game that you cannot lose, step number 1, subscribe to this channel. I post weekly content that raises your financial IQ and helps you create real, lasting freedom. Step number 2, invite a friend. Friends don't let friends retire broke. What are you doing? Step number 3, check the links below for free resources on the passive income machine, the vault, or our tax calculator, because the system is broken, but you don't have to be. Rise up, live free, and let's build a life that no one can ever take from us.